All right, traders, I want to talk to you about the real expectation of a bounce play. Okay. A lot of people don't tell you this, but there's a few traders online that'll let you know this. But, uh, when a stock drops and you're trying to make a bounce play, uh, you know, about 80% of the time you'll get a 25 to 30% bounce. Okay. About 40% of the time you'll get a 50% bounce. And about 20% of the time you'll get an 80% bounce, right? So if you're making a bounce play, you need to have a real expectation of the move that you're going to get, right? Too many people buy into a bounce play and they're looking for all new highs and they hold their full position. What you need to do is when you make a bounce play, you need to start scaling out of your position near that resistance level, okay? Because more often than not, price will continue to the downside after it hits that resistance. And also, you need to look at the stock you're trading. Does it close high on the day? Look at the daily chart and look at the daily candles. On a big green day, does it close near the highs, or does it sell off and have a huge upper wick and close near the middle or even the lows of the day, right? So that's how I gauge it, right? If I'm trading a stock that has a characteristic of closing near the highs and it's got a nice deep pullback, then yeah, I'll hold a piece and look for a new high. But if it has a characteristic of not closing high at the day and it's got a big wick, then I'm looking to get out right at that resistance level. So having a realistic expectation of the move that you can expect is very, very important, okay? Um, if you make a bounce play, you buy on a pullback, you need to scale out near resistance and you need to just have a realistic expectation of the move that you can expect. All right. Sometimes it will make new highs, sometimes it won't, but you have to look at the characteristic of the stock and know the stock you're trading. Okay. History tends to repeat itself. If a stock closes strong at the end of the day, then chances are you might see a new high or it's going to close near the highs. And then as far as swinging that play, you need to look at the characteristics on a big green day. What follows? What normally follows? Is it a continuation move to the upside, or is it a few days of sell-off before it tries to go test those highs again? So it's very important to know these things because you need to know if you're going to swing it. The worst thing you want to do is hold a position overnight, wake up, and then you're down 30-40% on the play, right? So make sure you know the characteristic of the stock that you're trading and how it reacts that day and the following days, right? I made an Intel play the other day. I bought put options on Intel, and this was right after earnings. Well, I could see on the daily chart that this thing, when it has a big red day, a big gap down, it usually continues to the downside for several days. So I was able to swing that position for 1,800% gain because I didn't know it was going to continue down, but there was a high probability that it was going to continue to the downside, right? So knowing the stock, knowing the characteristic of the stock that you trade is very, very important. It'll give you an edge, right? And that's all you want in this business is a little bit of an edge to increase your probabilities of winning. So hope this helps you guys. If you need help, reach out to me, istreamtrading@gmail.com. I'll do my best to help you. And until next time, peace.